Hello listeners, and welcome to Plugged In, the Energy News podcast from Montel, where we bring you the latest news, issues and changes happening in the energy sector. Now, coal is a topic we haven't covered very often on the podcast, but it's one that's becoming increasingly difficult to ignore. It's back in the headlines, it's driving market behaviour, and it's raising some pretty big questions about the direction of global energy. With war in the Middle East disrupting gas markets and sending prices soaring, are we starting to see a shift, however temporary, away from the energy transition? And more specifically, is coal, the fuel many thought was on its way out, beginning to make a comeback? Today, we're digging into what's really happening behind the headlines, looking at the economics, the market signals, and whether this is just a short-term reaction or something more structural. So that's the scene. Early signs that coal is becoming more competitive again, at least relative to gas, with some companies in Europe already increasing imports and reconsidering how they generate power in the months ahead. But how far does this go, and where are we actually seeing this shift play out? Now let's dig into the data, the regional dynamics, and what wholesale markets are really telling us. Now it's a great pleasure to be joined by Laurence Walker, who's Deputy Editor-in-Chief at Montel News. Warm welcome back to the pod, Laurie.
Thank you, Richard.
Crazy times, but I think we're here to talk about a possible comeback for coal. We're seeing, obviously, gas prices are extremely high and the cost of generating electricity from gas also very high. But what's happening with coal? Is it making a comeback, Laurie?
Certainly in theory, it should be making something of a comeback. It's obviously early days. We're looking back at a few weeks of war so far and the impact, and so some of the data we'll only be able to see over the coming weeks. But initially, we're seeing certainly increased imports of coal to Europe. I think we're looking at perhaps a 4-month high at the moment for March in terms of thermal coal imports, and there certainly in terms of profitability, the economics are looking a lot better for coal-fired generation than they are for gas at present.
This is obviously switching from gas-fired to coal-fired generation. Where is that possible now? And it's not possible everywhere in Europe, is it?
Well, no. We had the UK phased out all its coal a couple of years ago. Other countries have also been reducing their coal capacity to meet these green targets. So the phase-out is still going ahead. In countries predominantly like Germany, there is certainly some room to burn more coal, and I think if people can, they probably will be doing what they can. There have been some factors. Obviously, we've had improved renewables. We had some wind. We've had some solar. Other things which have contributed and perhaps made the impact on coal slightly less pronounced so far. But yes, I think in Germany Italy last week approved sort of keeping a couple of plants running as well. I think Southeast Europe, we're seeing a bit more in Bulgaria, some other countries. So I think people will be at least thinking of using more coal, even if they haven't to a massive extent yet.
And obviously, as you mentioned, we're in the, in the season for sun, if you could call it that, where a solar power is certainly in the ascendancy, at least in the daylight hours. But it's the question of, that evening when the sun goes down. Now, what are forward prices indicating? We call it the profit margins for coal-fired generation, or the clean dark spreads, versus those for gas-fired generations, which are the clean spark spreads, Laurie.
Yes. If we look at the clean dark spreads, which as you say is the profits for burning coal to produce power, they're largely still slightly negative. But if you compare it to what we're seeing for gas, they are a lot more favourable. So we could look sort of minus 20, 25 or so for coal-fired generation per megawatt hour. Sorry, for gas-fired generation per megawatt hour, compared with just a few euros for coal. So if the incentive is there in that it's not as bad as gas, and I think looking ahead, that's a similar picture. Certainly for the next couple of months.
Brilliant, Laurie. Thanks very much for setting the scene for us for this week's episode on the potential of coal-fired generation making a comeback. Thank you.
Thank you, Richard.
Now, I'm very happy to be joined by two leading analysts who look at coal markets in particular. So, Toby Hassall, lead analyst at the London Stock Exchange Group. A warm welcome to you.
Thank you, Richard. Good to be here.
And Firat Ergene, who's lead Insight Analyst at Kpler. A warm welcome to you too, Firat.
Thank you, Richard.
We're here to talk about potentially coal making a comeback in the European power mix in particular. So we've seen gas prices surge, coal prices also followed, but suddenly coal is making a comeback. Where is that the case? Where's that happening, Toby?
Richard, yes, that is a narrative that we have seen unfold over the past few weeks with the Middle East conflict disrupting LNG supplies. So in Europe, as you mentioned, there has been some changes to the fundamental structure of the markets. So a large increase in TTF gas prices has led to sharply increased power generation costs from gas plants, which has led to some increases in the level of expected hard coal generation on the continent.
Okay, thanks, Toby. I think we'll come back to that and say where in particular is happening, because it's not the case across the board. But Firat, let's talk a little bit about the obviously the cost for generating electricity with gas plants has gone up substantially. What about for coal? What's the profitability level at the moment for coal-fired plants in Europe? Does it vary?
On a demand perspective, I guess it's good to focus on Germany, which is the biggest importer of coal in Europe, and I think that's where most of the demand is going to come from in the coming months. And in terms of profitability, despite the recent increase in power prices, the current implied margins for coal generation are still actually not profitable for the immediate short-term future, because we are nearing summer season and Germany has quite a bit of renewable capacity, which thrives in spring and summer season. So from a demand perspective, we are not actually looking at a high residual demand on the power mix, because you have lots of renewables, so you have less reliance on thermal generations. So I think we are in the negative territory for both like high efficiency coal plants and like low efficiency coal plants in Germany until the next winter season. But then if you look at the forward curve and do the maths for the implied margin for the term, then you get a steep increase in the clean dark spreads. And for the high efficiency plants, you're possibly looking at around 25-30 euro per megawatt hour as of today. I mean, it's very volatile, so it changes every day. But like both 40-46% efficiency coal plants are in a positive territory for the winter period of 2026-2027.
Yeah, and that could obviously change if the war comes to an end potentially. But yes. Yeah. So that's what that proviso. Just before I go over to Toby, have you got any visibility about the lignite profitability of lignite plants? I mean, that's not sort of openly traded in the market, but obviously that's something that's a resource that Germany relies on quite heavily to provide some of the baseload generation.
Yeah, like you said, you don't have too much transparency over their costs, but they are the lowest cost element of the German grid. So you are typically looking at 8 to 10 gigawatt of very stable, reliable generation from lignite. So in terms of competition for thermal output, you are mainly looking at for the remainder of the balance from lignite. So it's just a competition between coal versus gas for the remaining balance. But we can assume they are profitable.
Absolutely. I mean, Toby, if I could come to you, I mean, obviously everything hinges on the war, and how long the war will last. Have you done any analysis on that in terms of how that changes the fuel switching that's going on?
Yes. So as you mentioned, there of course is a large element of uncertainty about the magnitude and the duration of the conflict in the Middle East. But our power research team has undertaken quite a detailed level of analysis about the potential magnitude of switching from gas to coal. And as Firat mentioned, through Q2, so through the next few months, April, May, June, there is upside for hard coal generation. albeit from a very low original expectation. So prior to the conflict, we were expecting less than 100,000 tons of coal burn in Germany for those 3 months. That's now increased to an expectation of around 1.5 million tons. So from quite a low original expectation, there is an increase in expected coal burn. And of course, we are watching metrics like the clean dark spread and of course the SRMCs as a guide to what we should expect.
But these plants, they won't be running baseload, though, will they? I mean, they'll be coming in when the solar production dips off, for example. Is that something that you've done analysis on?
Yes. So the base load, I mean, just last week, for example, hard coal, clean dark, the clean dark spread was in negative territory. So we did see, a large advantage for coal on an SRMC basis, but that negative clean dark spread was a limiting factor. So yeah, we would expect that when renewable power generation is relatively low, that there would be an opportunity there for hard coal to increase its supply into the market.
And do you share Firat's view on the sort of forward curves that sort of when we're looking into Q4 and into the winter of 26-27, that's when hard coal really comes into the money?
Well, on a seasonal basis, yes, that would be the expectation. Of course, looking out to the next winter carries significant uncertainty due to the trajectory of the conflict in the Middle East. But in a scenario where LNG supplies remain very disrupted, LNG prices are very high as they are today, or even higher, yes, we would see hard coal generation much stronger than we would have expected just 5-6 weeks ago.
Yeah, I mean, absolutely. That's the reality. And they're not just very high, but also extremely volatile. And a lot is hinging on what President Trump is putting out on social media, I see generally. But Firat, can you talk us through a little bit what's about the prices of hard coal? What's happened? Have they followed gas? What's happening both on a more on a spot and a forward level?
I mean, if you look at the performance of coal versus gas since the beginning of the conflict, I mean, as of this week, so coal was underperforming gas. So the price of gas has gone up to a greater extent than coal. And I think that's because of the kind of limitation on the demand side. So Europe isn't functioning with a very large coal demand potential because you get a cap basically on how much they can burn because the available coal-fired capacity isn't substantial. So even at the peak demand season, you are looking at somewhere slightly below 10 gigawatts in Germany, which has the largest potential in Europe. And in Netherlands, Italy, you don't have available capacity more than a few gigawatts. So I think that's the main reason why coal hasn't overperformed gas. The main reason, I think the other main reason is that from the supply side, so last year, coal market was actually in an oversupply situation. And in the Atlantic Basin, the market was expecting some supply cuts, which hasn't materialized. So on the supply side, I think there's enough coal to basically meet the potential, higher demand. So it's kind of balances each other out. So on the gas side, you have multiple factors supporting demand, which I think is driving the price. So you have very low gas inventories in Europe right now. And also obviously one of the largest LNG facilities aren't exporting LNG into the market. But on coal side, it's relatively stable.
And the coal supply is coming from the stand like Colombia, South Africa, Australia,
and the US,
and the US, of course. The US is one of the major exporters. Toby, Firat mentioned Germany initially, and then also Italy and the Netherlands. Are those those countries, the main countries that have the possibility to switch to coal-fired generation, or are there others as well that you're looking at?
I guess the focus of our discussion today so far has been Europe, but of course the coal market, the seaborne coal market, is global, and another region which has been affected is the Asia region. So countries such as Japan, South Korea, Taiwan have a significant exposure to LNG markets, with LNG feeding their gas power plants. So those markets, we are also expecting some fuel switching from gas to coal. The fundamental setup of those markets quite different from Europe, insofar as Europe has quite a high carbon price, whereas in Northeast Asia, those markets less affected by carbon pricing. But we had forecast that just going back 5 or 6 weeks ago, we had forecast that this year would see some switching from coal towards gas. Now that has changed. That outlook has changed quite significantly. And in fact, we're now expecting switching from gas to coal. Now, the other important point to get to, maybe we can come to that if we have time, is which countries will the coal be supplied from to those Northeast Asian markets. So there's a bit more of a spread, including perhaps Russian coal as well coming into the supply mix.
That's very interesting. I'd like to focus primarily on Europe in the discussion today, because that's the focus of the podcast in a sense. But this is very interesting. Also, you've seen countries probably like Vietnam, Philippines, these kind of countries also burning or turning to coal amid these very, very high gas prices. But Toby, I mean, are we when we're talking about Europe, we're mainly focusing on Germany, obviously, which has a huge amount of coal-fired capacity, but Netherlands, Italy, and are there others? Poland, for example, that are also, they've maybe not making the switch from gas to coal, but they're just sticking with their coal-fired generation.
Well, I think our power research team would probably have greater insights that they could give you on that. But yes, certainly Germany is a key import market within Europe. We have seen news, I think it was just in the last couple of days, that Italy is looking to extend the operation of some coal plants, and I think the coal phase out plan for Germany is subject to revision now, given the disruption that we're seeing in energy markets.
Yeah. Do you share that view, Firat, that those are the prime markets for coal in Europe?
Yeah, I agree. I mean, what I would add on to what Toby already shared is, for Poland, the demand is quite seasonal, so you're mainly looking at winter period. So because their domestic production is actually sufficient to meet the spring and summer season demand. So they are looking to import more supply in the winter period, because the main use of coal there is for the combined heat generation plants.
Yeah, interesting. I mean, do you think that this is just a short-term move, or do you expect this to last sort of into 2027 and beyond, Firat, this switch to coal?
Yeah, I think, as analysts, sometimes we get lost too much on fuel switching and dark spreads. So it's important to, clarify that at the end of the day, it depends on whether the market thinks there is demand certainty for coal. Obviously, now there are margins. And if people are convinced that coal is going to be profitable than gas, and if the margin is going to be positive, then it could move beyond the current foreseeable future. But given the current volatile environment, I'm not sure if end users are actively looking for cargoes or looking for term supplies beyond the immediate future now.
Toby, you mentioned that you expected coal imports in Germany to be 100 before the conflict started, or 5-6 weeks ago, to be 100,000 tons, and now you're saying it's 1.5 million. What's your view for the rest of the year?
Well, yeah, I think that forecast for power sector coal consumption in Germany, I mean, it's an interesting delta, that one. So you're going from almost nothing in Q2 to something. So just under 100,000 tons to 1.5 million tons. Now, at a global level, 1.5 million tons in a quarter, I mean, that's not a particularly huge quantum of coal. compared to, say, imports into Japan or South Korea. So the market can supply that additional tonnage without tightening coal markets too much. Hence, coal prices have increased, but not to the extent of LNG prices. So looking ahead through the rest of this year, of course, we will see that that seasonal increase in renewable generation in Europe through summer, which will reduce the residual demand that coal could potentially fill. But then, as we approach those winter months later in the year, let's see if LNG prices and TTF prices remain high, and if they do, there certainly will be scope for much higher hard coal generation and imports than we would have expected just 5 or 6 weeks ago.
I mean, that's. Do you also share Firat's view that the market is generally well supplied? But what are the dynamics with increased demand in Northeast Asia plus more coming from Europe? Is that going to tighten supply and also drive prices upwards, Toby?
Sure. Great question. So I guess the impact that we've seen for coal markets, the rally in prices, nothing like what we saw back in 2022. So yes, there has been a substantial increase. Demand prospects have increased. But as Firat mentioned, coal markets were relatively well supplied prior to this. We're also entering the shoulder season for the Northern Hemisphere markets. Spring temperatures, reduced heating demand, I should say. So the market was quite well supplied and therefore has been able to deliver that increase deliver into that increased demand environment. Now, as we come into the summer period, particularly in Northeast Asia, we see a ramp up in hard coal generation on a seasonal basis with that cooling demand coming through. Now, that is when we could start to see coal markets looking much tighter than they are currently. In that situation, we could see some supply response coming from countries like Russia, from the US, Colombia as well. There was some supply cuts at Glencore's Kerajon mine last year. Also a reduction in production, a reduction in output by Drummond as well. So there's some capacity that could come back into the market there. There is also some scope for some lower grade metallurgical coals to be diverted into thermal markets. So that's something that we monitor as well. But generally speaking, there's not going to be a shortage of thermal coal. The market will be able to respond to this increase in demand.
Firat, what's your view here?
I think Toby raised a very good point comparing it with the crisis in 2022, and that's something I fall back to when I need to see what are the possible scenarios here. I think another key aspect why the market is in a better position to address the additional demand is because it's kind of different in the shape that the trade flows needed to be reshaped in the crisis of 2022. So if you're looking at the Atlantic basin, you had Europe, Turkey, and Morocco, which are the main demand hubs, and they all needed to basically switch the main origin. So like in Turkey, you had Colombia, which was the main supplier. In Morocco, you had Russia, which was the main supplier, and obviously Russia was supplying Europe too. But after the sanctions on Russian supply, so you basically had a full reshuffle, and then Russia became Turkey's largest supplier, and then it basically lost access to Moroccan and European markets. But the problem at the time was most of the Colombian supply was already contracted to Turkey, so this also created some additional stress on the supply side, especially on the immediate spot market, because there wasn't enough coal to be made available to European buyers. So given that this demand and supply balance is you don't need so much of a change in the the demand and supply balance at current conditions. I think that's one of the reasons why we are not looking at a very pessimistic scenario in terms of supply availability.
Yep, I mean, it raises a number of fascinating issues and questions here. I think what we're seeing here in the global dynamics. So, we're seeing increased dependency on one fuel, on gas, which then is obviously driving increased into coal, and what that's doing for the environment, for the climate, potentially in terms of going to increase European emissions. But for Russian coal, I mean, that's you're saying here, guys, that there could be an increased in coal supplies from Russia. Is that likely? Then is that something that's going to come into the global market, Firat?
I mean, on the Atlantic Basin, you don't have too much upside because for the buyers of Russian coal in the Mediterranean, there's not much scope for Russian coal to gain more market share. They already maxed out their potential. But in Asia, I think there's potential there. Like Toby also mentioned the potential switch in Japan, Korea, Taiwan. I mean, obviously not Japan, but for South Korea and Taiwan, I think there's some potential for Russian coal to come into play, and also for China too.
Do you share that view, Toby, that there's going to be more Russian coal coming into specifically Northeast Asia?
Yes, I think, I agree with Firat's point about the Atlantic Basin conditions, but certainly when it comes to markets such as South Korea, which does not have an explicit formal ban or restriction on imports of Russian coal. Now, we would expect that South Korea may increase its purchases of Russian thermal coal. It did a similar thing in summer last year when there was quite a tightness of supply coming out of Australia due to some weather issues in Australia at the time. So South Korea tapped the Russian thermal coal supply, and so we might expect a similar arrangement. South Korea will use Russian coal to meet some of that increase in demand through the summer period.
And do you expect any of that to slip through into Europe despite the sanctions?
I very much doubt that. I think we have seen Kazakhstan become a more prominent supplier of thermal coal into the EU, and I think last year there were some restrictions that were revised to allow coal from Kazakhstan but exported through Russian ports to be permitted for import into the EU. So I would expect that the EU will remain quite firm in their restrictions on imports of Russian coal.
Yeah, we'll see how that's maybe a topic for another podcast anyway, how Russian coal could eventually slip in. But I just a final question really, guys. Do you think this comeback of coal, old King Coal, if you like, is it a short-term reaction to what's happening in the Gulf, or could there be a little structural change here? Firat, if I start with you.
Maybe I'm a bit biased here, but coal is obviously the cheapest form of energy. And like in any kind of social organization, civilization, you need areas to fall back to if there's a force majeure issue like we are having now. So from a long-term perspective, I don't think phasing out coal is really realistic because you never know what's going to happen on other fronts. So like the more diversified you are, and this also applies to renewables and nuclear as well, I think you're in a better position to serve the society's needs. So I think ideally in the long term, coal, I think, should be a part of the generation mix.
I think there are many who would disagree with you, Firat, and who would say that the solar power and wind are substantially cheaper than coal, especially for the environmental costs. But absolutely, I take your point. Toby, what's your view?
Well, I think Firat's points are very valid. However, another way to look at this, the impact of this current conflict and the disruption on markets, is that this will actually accelerate the energy transition. You will see countries respond by accelerating their deployment of renewable power, maybe reviewing their stance on nuclear power, as we've seen in Taiwan, with plans submitted to restart one of their reactors. And Japan, of course, has scope to restart more of its nuclear fleet. So I think there will be some more pragmatism coming into policy in relation to energy mix, but not necessarily at the expense of less aggressive carbon emissions reductions targets. So I think there's a way to view the current disruptions as something that will accelerate the energy transition.
Yeah, I think that's a very kind of positive spin, and that's a good place to end. I think, Toby, thank you very much for that. I think also we're seeing some noises generally from the German energy minister as well regarding nuclear, and maybe admitting that it was a mistake to decommission all those nuclear plants, especially given the current crisis. But that's for a topic for another podcast, another day, I think. So, Firat and Toby, thank you very much for being guests on the Plugged In podcast.
Thank you very much. Thanks.
Thank you.
And to you listeners, thanks for listening to this episode of Plugged In. If you enjoyed this discussion, please like, rate, and follow to make sure you get the latest podcast episodes as soon as we release them every Thursday. We'd also love to read your reviews of the podcast. It helps us to keep up to date with what you, our listeners, think of the podcast and what content you want to receive more of. Finally, you can head to montelnews.com for more news and analysis from our team of journalists across Europe and beyond. See you next time.